This is Alan Bush with ADMIS. In the stock index futures, we are seeing lower prices this morning. Looks like most of this pressure linked to weaker economic data out of the Eurozone and comments from the International Monetary Fund basically downplaying the global economic growth forecast. In fact, they did lower forecasts for the global economy for this year and for next year as well. However, I think it's probably no surprise that the global economy is slowing. So I think there's a very good chance that we will see futures, even though they are lower now, recovering and very possibly trading higher on the day. So I think the IMF is basically reporting old news. So look for a recovery in stock index futures today. Longer term, still thinking that we can work higher as lower interest rates internationally come back to support this market in the long-term view. Over in the currencies, the dollar index lower, even though it should be higher based on the overnight news. Also, the euro currency is trading higher, even though we did have some very negative numbers out of Germany. So we continue to believe that most of the gains in the dollar index have already been made. Interest rate differentials are, I believe, no longer going to be very supportive to the dollar index, or at least not as supportive as they had been. So this is a very good time, I think, to exit positions in the currencies. If you're long the dollar, I would be out of long positions there. If you're short the euro currency, I think I would cover as well. It also looks like the European Central Bank, even though they are likely to be more accommodative ahead, I think they will be very slow to add more stimulus. And I think the Bank of England, although they are on track to raise interest rates in February of next year, I believe that it will be much longer before they raise rates. So interest rate differential advantages, I think, have diminished. This is a good time to exit longs in the dollar, shorts in the euro, shorts in the yen as well, since the Bank of Japan is likely to delay further stimulus. However, if we are right in thinking that the global economy is slowing, that is all the more bullish for the outlook for the treasuries, which are showing good gains today. Still thinking that the main trend is higher in the 30-year bond, which should lead the way, but I believe the entire curve is likely to trade higher. So once again, I'd focus on long stock indices, even though they're a bit lower today, and long treasuries, especially the 30-year bonds, and avoid foreign currencies for now. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.